Welcome to our second session in AqabaConf 2019. The first topic will be talking about conventional insurance versus Takaful. Our head of sessions, Mr. Alaa Abdel Jawad, CEO of Solidarity First Insurance Company, will lead the session. Please welcome Mr. Alaa Abdel Jawad. Mr. Abdel Jawad will introduce the speakers for this session and will kindly give us a brief about the presentation. Please welcome Mr. Alaa Abdel Jawad.
Thank you, Farah. Yeah, hello. Good afternoon, everybody. Thanks for joining us for our second session for today. And the first topic basically is going to be about the principle of conventional versus Takaful insurance, which again, that puts again Takaful into being a main subject due to the fact that it is a very developing and becoming more required business model in the region, especially in our region. Actually, this importance comes from some main facts. First of all, as you know, Muslim society represent maybe 1/4 of the world population, almost 26% of the world population. Second is the concentration of wealth in this region. Of course, 40 years back, maybe people were looking at insurance and the concept of insurance as maybe haram or non-Sharia compliant or forbidden, in other words. We're definitely not going to argue with this point here. It's not the right place to argue with this. And definitely, I'm not the right person to do so. However, it's very important to highlight this model, which is relatively a new business model, and see the difference between the Takaful model and the conventional one. Our distinguished speaker, Mr. Mohamed Moussa, is going to brief us about this in his presentation. He will start about briefing us about the principle of the conventional, and then we'll move to the principle of Takaful. Then he will go into details about the Takaful, different Takaful models between Wakala, Mudaraba, Hybrid, and Waqf. Mr. Mohamed Moussa currently works as a technical manager for Alliance Insurance and Reinsurance Brokerage. He's been in the insurance field for more than 15 years now. He started his career, actually, he's a bachelor, he holds a bachelor degree in MIS from the Arab Academy for Science and Technology and Maritime Transport, Alexandria, Egypt. He started his career in Ahliya Insurance in Kuwait, one of the leading insurance companies in Kuwait. Then moved to the Takaful sector, and he enjoys 13 years in the Takaful sector. He's a member of the Marine and Aviation Committee in Kuwait and participated as a speaker and panelist in Kenya Takaful and Takaful International Conference held in Nairobi about the Takaful insurance experience in Kuwait. And discussion was how to enhance the awareness of the insurance, especially Takaful insurance in the society, participated in various conferences and courses in Kuwait, Egypt, Lebanon, and Jordan. Please welcome with me Mr. Mohamed Moussa, and after that, I'm sure we'll have a lot of questions. So the mic is all yours. Thank you.
Good afternoon, ladies and gentlemen. Thank you, Mr. Alaa. And I would like to send the apology of Mr. Saad Maki, my colleague, that he couldn't be here today due to a special condition. So let's start our lecture today. Unforeseen events and emergencies can happen to anyone. It can lead to the loss of a loved ones or some prized possessions. Humans have always been planning for their future in order to protect ourselves from such situation and assure that we will get some financial support we buy insurance. There are two different types of insurance, which are conventional and Takaful insurance. What is conventional insurance? Insurance provides the means for people to transfer the burden of uncertainty of financial losses to the insurer for an agreed financial consideration called the premium. In exchange, the insurer promises to provide financial compensation to the insured should a specified loss occur. It's a risk transfer mechanism by which individuals or organizations can exchange their uncertainty or financial losses or risks for the certainty of the premium. It's a fixed premium. The insured is certain that he will not have to pay more for that year. This service of providing certainty of cost fixed premiums is of immense value, especially to organizations, as it would help them budget their expenditures. This is the financial security provided by modern insurance. Insurance is an arrangement in which a person makes regular payments to a company, and the company promises to pay money if the person is injured or died, or to pay money equal or less to have value of something such as a house or car if it's damaged, lost, or stolen. Insurance is a means of protection from financial losses. It's a form of risk management primarily used to hedge against the risk of a contingent, uncertain loss. An entity which provides insurance is known as an insurer, insurance company, or insurance carrier. A person or entity who buys insurance is known as an insured or policyholder. The insurance transaction involves the insured assuming a guaranteed and known relatively small loss in the form of payment to the insurer in exchange for the insurer's promise to compensate the insured in the event of a covered loss. The loss may or may not be financial, but it must be reducible, established by ownership position or pre-existing relationship. The insured receives a contract called the insurance policy, which details the conditions and circumstances under which the insured will be financially compensated. The amount of money charged by the insurer to the insured for the coverage set forth in the insurance policy is called the premium. If the insured experiences a loss which is potentially covered by the insurance policy, the insured submits a claim to the insurer for processing by a claims adjuster. Principle of insurance. The important principles of insurance are as follows. The main motive of insurance is cooperation. Insurance is defined as equitable transfer of risk of loss from one entity to another in exchange for a premium. Nature of contract. Nature of contract is a fundamental principle of insurance contract. An insurance contract comes into existence when one party makes an offer or proposal of a contract and other party accepts the proposal. A contract should be simple to be a valid contract. The person entering into a contract should enter with his free consent. Principle of utmost good faith. Under this insurance contract, both the parties should have faith over each other. As a client, it's the duty of the insured to disclose all the facts to the insurance company, and for any fraud or mispresentation of facts can result into cancellation of the contract. Principle of insurable interest. Under this principle of insurance, the insured must have interest in the subject matter of the insurance. Absence of insurance makes the contract null and void. If there is no insurable interest, an insurance company will not issue a policy. An insurable interest must exist at the time of the purchase of the insurance. For example, a creditor has an insurable interest in the life of a debtor. A person is considered to have an unlimited interest in the life of their spouse. Principle of indemnity. Indemnity means security or compensation against loss or damage. The principle of indemnity is such principle of insurance stating that an insured may not be compensated by the insurance company in an amount exceeding the insured's economic loss. In type of insurance, the insured would be compensation with the amount of equivalent to the actual loss and not the amount exceeding the loss. This is regulatory principle. This principle is observed more strictly in property insurance than in life insurance. The purpose of this principle is to set back the insured to the same financial position that existed before the loss or damage occurred. Principle of subrogation. The principle of subrogation enables the insured to claim the amount from the third party responsible for the loss. It allows the insurer to pursue legal methods to recover the amount of loss. For example, if you get injured in a road accident due to reckless driving of a third party, the insurance company will compensate your loss and will also sue the third party to recover the money paid as claim. Double insurance. Double insurance denotes insurance of same subject matter with two different companies or with the same company under two different policies. Insurance is possible in case of indemnity contract like fire, marine and property insurance. Double insurance policy is adopted where the financial position of an insurer is doubtful. The insured cannot recover more than the actual loss and cannot claim the whole amount from both the insurers. Principle of proximate cause. Proximate cause literally means the nearest cause or direct cause. This principle is applicable when the loss is the result of two or more causes. The proximate cause means the most dominant and most effective cause of loss is considered. The principle is applicable when there are series of causes or damage or loss. Now let's talk about the Takaful insurance. Let's have a background. Since 622 AD, the concept of has been practiced in different forms. The foundation of the mutual insurance was laid with the help of sharing the responsibilities between the Muslims. In 1976, a fatwa was issued by the Higher Islamic Council of Saudi Arabia that Takaful is legitimate as compared to the conventional insurance. Since then, considering the Islamic values, the rules and regulation for the Takaful have been formulated. Based on this concept, in 2008, the Islamic industry grows from $1,338 to $5,318. There are more than 133 companies that are working on these rules. The leading countries are the Gulf states and Malaysia. The Islamic insurance. It's a type of insurance system in Islam that is based on the laws of Sharia or Islamic principles. It's a system in which money is pooled and invested. It's a mutual risk transfer arrangement in which both parties will share the profit and loss equally. Takaful is the Islamic alternative to conventional insurance, which is based on the idea of social solidarity, cooperation, and joint indemnification of losses of the members. It's an agreement among a group of persons who agree to jointly indemnify the loss or damage that may index upon any of them out of the fund they donate collectively. The concept of Takaful literally referred to as social solidarity and practically referred to as Islamic insurance is not widely understood. Takaful is an important part of the Islamic financial system. The concept itself and the nature of the operations of Takaful companies is a topic that has been relatively neglected compared to the Islamic banking. Takaful is a plan based on solidarity and brotherhood, which provides mutual financial aid and assistance to its contributors in case of need, whereby the contributors mutually agreed to contribute for the purpose. Takaful plan, it's a word of an Arabic origin, which means a system of Islamic insurance based on the principle of ta'awun, which is mutual assistance, and tabarru, voluntary contribution. Takaful technically means joint guarantee, whereby a group of contributors agree to mutually guarantee each other against addended loss, which suggests that the contributors are both insurers and insured in the arrangement. Similarities and differences between Takaful and conventional. Takaful is a cooperative institution based on the principles of contract for mutual cooperation, ta'awun, while conventional is a business institution operated based on the principle of contract. In Takaful, which is based on the principle of mutuality, members are insured and insurers themselves. All the losses are shared by the members themselves, and as such, to transfer of risk is involved, while the basic service operated by the conventional insurance to the community is the transfer of the indeterminate fortuitous economic losses associated with the stipulated risks in return for a predetermined payment, known as premium. Thus, it has been said and recognized that through the mechanism of conventional insurance, the insured substitutes certainly and uncertainly. Takaful insurance is dealing with halal products only. In Takaful, shareholder of the company, if any, are not entitled to participate in the profits generated by the insurance operators, while in the case of conventional insurance, the primary motivation is to earn profit from the insurance transactions for the shareholders. Takaful, the Islamic alternative to conventional insurance, is based on the idea of social solidarity, cooperation, and joint indemnification of losses of the members. In conventional insurance, the contract is based on the principles of exchange of interest. The relationship is designed in such a way that the insured buys protection by payment of a premium and insurer provides protection against the insured risk. Under Islamic law, insurance transaction cannot be concluded on this basis of buy and sale contract. The conventional insurance is a contract between two parties, whereas Takaful is a relationship in which everything is shared. In conventional insurance, everything is planned according to the profit that each party will earn. However, earning profits is not the major purpose of Takaful concept. In Takaful, both parties will equally divide the burden, whereas in conventional insurance, one party will take the risks for other. Takaful is based on the Sharia in Islam, whereas conventional insurance follows the rules formulated, consider profit in mind. Samples of Takaful. First principle, contribution as a basis of Takaful insurance. Takaful insurance is a contribution contract between a group of persons to cooperate together in order to fragmentize the risks stated in the contract and taking part in compensating the actual damages that incur to the subscribers resulting from the occurrence of the risk insured against. The contributor as interest holder in Takaful. The contributors mean the group of persons, natural or artificial, subject to a certain risk or certain risks mentioned in the contract, try to avoid the effects of the risks and compensate the damages that one of the contributors may be subject to through compensating the actual damages resulting from the occurrence of such risks. This is done by the commitment of each of them to contribute the payment of certain amount decided by the insurance policy, subscription installment. Managing the insurance processes and investing its funds on behalf of a group, the subscribing body. There are two cases. First case, there is no legal system that prevents or bans the subscribing body from managing the insurance processes and investing its funds. This is the original rule and the correct one, but it's not realized owing to practical and legal consideration. There is a legal system that allows the subscribing body to manage the insurance processes. Here, the legal actuality imposes the idea that stock companies will manage Takaful insurance processes on the basis of management contract and an investment between the stock company and the subscribing body. In other words, this is done pursuant to a contract under which the stock company manage and invests the insurance portfolio for the interest of the subscribers. This as per rules and controls of Islamic Sharia. Fourth principle, profit is a consequence and not a target in Takaful contract. This means that Takaful insurance policy is based on cooperation and Takaful depend on the contribution contract. Hence, the owner of the policy does not wait for a profit from it. Therefore, the net profit may be reflected in the form of decreasing the value of contributions after deducting the expenses and constituting the reserves, because the development of funds belongs to the owner. Contribution to the total of contributors as artificial group or as independent artificial person. The total of the insurance funds acquire the independent artificial quality by mixing these funds and disposing of them as per what the common justice decide, Al-Hanafi, Al-Maliki, and Al-Shafi'i. Sixth principle, Takaful insurance surplus system. It's necessary that conditions of Takaful insurance policies should be identical with the rules of Islamic Sharia. It's also necessary to revise the traditional commercial insurance policies and to remove every condition that contradicts the rules of Islamic Sharia so as to make use of such insurance policies. It's necessary to state the principle of Takaful insurance in the insurance policy. There are four different types of Takaful insurance: Mudaraba model, Wakala, Mudaraba and Wakala Waqf. Let's start with Mudaraba model. In Mudaraba, the Takaful cooperation acts as Mudarib and Takaful shareholders as money owners. The corporation as a Mudaraba manages the risks of both investment and insurance activities on behalf of the Takaful participants. In return, it receives a share in the form of percentage of the profits of the investments and or surplus Takaful, which is usually mentioned explicitly in the Takaful insurance contract. Neither the Takaful Insurance Corporation nor the participants can change the agreed participation rate without returning to the other party in respect of the profits of the investment and or the surplus Takaful after the signing of the contract. The Takaful shareholders alone shall bear any financial losses of investment and insurance activities as owners, provided that the losses are not the result of misconduct or negligence by the Takaful Insurance Corporation. In this regard, Takaful expects to earn profit if it's only confirmed that the costs of managing the Takaful insurance processes are the less than the aggregate share of the investment, profits, and or Takaful surplus. Some definitions. Contributors Investment Fund. A fund in which part of the contributors paid by the contributors in Takaful are allocated for investment and or savings. Contributors Risks Fund. A fund in which part of the contributions paid by the contributors in Takaful are allocated to meet the claims of the contributors on the basis of cooperation or assistance. Reserves. Deferred amounts in the financial positions to cover claims arising from Takaful contracts. Surplus or losses. The financial performance of the Takaful fund, which is the balance after deduction of the expenses and claims from the contribution, income, and the addition of investment returns. And this is a sample for Mudaraba model. As we see, the contributions are going to the fund, then going to the it goes down. I don't know how it works. This, to the profit investment, surplus, then to the distribution of surplus profit. And it depends, as I said, on a percentage of the contribution. Then it goes to the Takaful companies, to the operating expenses profit and distributor profit. This is the family Takaful. That one was the general Takaful. Wakala model. According to this model, the Takaful insurance company is the agency and the contributors are the clients. The Takaful company will be acting as an agent on behalf of the contributors and acts in both the investment and Takaful activities. They receive administrative fees called wakala fees, which are usually a protection of the paid contributors. The fees of wakala shall be agreed in advance and expressly stated in the Takaful contract. On the part of Takaful Insurance Corporation, wakala fees are expected to incur the total amount of number A, management costs, number B, distribution costs, including brokerage, remuneration, and operating profit margin of the Takaful Insurance Corporation. On this basis, the Takaful Insurance Organization will make profits of the wakala fees. Charged are the higher than the management costs it bears. Nor do they directly participate in the risks faced by Takaful insurance funds or any of their surplus defects. In addition, the wakala model allows for an additional incentive to be received by the Takaful Insurance Corporation for good performance. In accordance with the agreed Takaful agreement, performance fees are normally associated with Takaful results. With adequate reserves in the capital amount for solvency support, there is no need from the perspective of the contributors for any excess of the insurance process. The level of contributions must be allowed, in addition to other requirements, to deduct reasonable wakala fees, including any incentive for good performance. And this is the model of wakala, general Takaful. As we said, wakala fees is percentage of the contributions. This is for the family Takaful. Mudaraba and wakala model. According to this agreement, the wakala contract is approved for Takaful insurance activities, while the Mudaraba contract is used for investment activities. This seems to be a growing demand from Takaful insurance institution. This is Mudaraba and wakala. As we can see, the contributions are going to the investment account, then goes to profit, then risks fund, then to the investment, and then the distribution of surplus. Now let's have a comparison between Mudaraba and wakala. Mudaraba is based on a profit-sharing mechanism. However, wakala is based on an wakala contract, a business contract between the participants who provide the fund or capital and operator that manages the business. In wakala contract is agreed between the participants and operator to conduct the business. Operator acts as a manager or mudarib. Operator in wakala acts an agent or wakil. A profit-sharing ratio is decided between the participants and operator. Operator charges a fee under the agreement for the service it renders. Profit in Takaful includes returns on investment and surplus from underwriting from participants' fund only. It does not include profit posted by the operator, while in wakala, operator earns its revenue from the wakala fees as well as returns on the investment of its shareholder fund. Now let's talk about Sharia governance. In Takaful contract defines a unique relationship between the Takaful operators and contributors. It requires Takaful operators to duly observe fundamental obligations towards contributors. Practically, in terms of adhering of Sharia principles, undertaking fiduciary duties, and meeting prudential standards. In order to ensure compliance with Sharia rules and principles, it's necessary to develop a Sharia governance system in Takaful operations. Sharia governance system refers to the set of institutional and organizational arrangements through which a Takaful operator needs to ensure that there is effective independent oversight of Sharia compliance. A key characteristic of independence in the ability to exercise sound judgment and views without any influences from any quarter, while carrying of his or her duties, a member of the Sharia Council Board should always have complete moral, intellectual, and professional independence. Islamic Financial Services Board, IFSB, has prescribed certain guidance principles on Sharia governance system for institutions offering Islamic financial services. A Takaful operator can follow these guiding principles to ensure Sharia compliance. These principles are as follows. The concerned Sharia Council must have clear terms of reference regarding its mandate and responsibility. There can be a sound code of ethics and conduct that would enhance the integrity, professionalism, and credibility of the members of the Sharia Council. The Takaful operator shall ensure that any person mandated with overseeing the Sharia governance system fulfills acceptable, fit, and proper criteria. The Takaful operator shall facilitate continuous professional development of persons serving on its Sharia Council as well as its internal Sharia compliance and audit department. There should be a formal assessment of the effectiveness of the Sharia Council as a whole and the contribution by each member of the effectiveness of the Sharia Council. The Sharia Council should play a strong and independent oversight role to exercise objective judgment on Sharia-related matters. No individual or group of individuals shall be allowed to dominate the Sharia Council's decision-making process. In order to fulfill its responsibilities, the Sharia Council should be provided with complete, adequate, and timely information prior to all meetings and on an ongoing basis. In order to fulfill responsibilities of Sharia Council should be provided with complete, Sharia Council members should ensure that internal information obtained in the course of their duties is kept confidential. The Takaful operator should fully understand the legal and regulatory framework for issuance of Sharia pronouncements resolution. It should also ensure that the Sharia Council strictly observe the said framework and wherever possible promotes governance of the Sharia governance standards. Sharia pronouncements resolution refuses to a juristic opinion of any matters pertaining to Sharia issues in Islamic insurance Takaful, given by the appropriately mandated Sharia Council. A Sharia pronouncement resolution shall be issued only through appropriate due process. In jurisdictions where there is a central authority such as National Sharia Board Council or Fatwa Council, the central authority should have power to issue such pronouncement, and the respective Sharia councils of the operators should ensure its compliance. Each Takaful operator should have Sharia compliance review or audit department for verifying that Sharia compliance has been satisfied. Any non-compliance should be recorded and reported, and as far as possible, be addressed and rectified. The internal Sharia compliance and audit department shall recommend to management to rectify and address the issues and report to Sharia Council. The burden of ensuring a sound and effective Sharia governance system should not be left to members of the Sharia Council only. Every shareholder in Takaful business, the customers, employees, agents, brokers, management, shareholders, and the regulatory authority should also play a part in sharing the responsibility. However, the primary duties of Sharia Council are as follows. Advise the board of directors on Sharia-related matters. Preview and endorse Sharia-related policies and guidelines. Prepare a Sharia process manual. Endorse and validate relevant documentation for new products and services, including contracts agreements. Observe the computation and distribution of zakat or any welfare fund channeled to charity. delegate some of its functions to any of group of council members, management team, or outside experts, endorse and validate products guidelines, investment guidelines, marketing, advertising and sales, literature, illustrations. Submit reports regulatory to board of directors in relation to Sharia audit findings, product design, balance sheet, financial statements. Submit annual Sharia compliance report for onward disclosure and distribution of shareholders' policy holders. The Secretary of the Sharia Council shall be responsible for recording the minutes of meetings. All minutes be properly archived by the Secretary for future reference. Relevant minutes of the Sharia Council meeting be submitted to relevant departments and senior members of management. Ensure that the Council is transparent and its independent character is not jeopardized. Promote appropriate ethics and values within the organization and ensure continuous improvement of Sharia control process. Each member of Sharia Council should contribute to the best of his or her ability in enriching the discussion and deliberation of the issues raised in the Sharia Council's meetings. Each member of Sharia Council should strive for continuous self-improvement, demonstrate integrity, and accept responsibility with due care and diligence. Each member of the Sharia Council should exercise rational and logical reasoning, demonstrate willingness to learn from others, and strive to be in achieving qualities. Sharia members should possess competences in respect of academic qualification and or reasonable existence in Islamic finance, Islamic commercial law, fiqh al-mu'amalat, and to be able to demonstrate an adequate understanding of Sharia-based financial transactions. Sharia members are also expected to have strong skills in the philosophy of Islamic law, usul al-fiqh, and to be very conservant with the primary sources of the Sharia. It's also expected that the members of Sharia Council should have good knowledge of Arabic and be able to converse in English. Furthermore, a member be able to display an understanding of following. Number one, Sharia rules relating to Takaful operations, general legal and regulatory framework that may apply in Takaful transactions, impact of introducing Takaful schemes to the market in achieving the object of Sharia, maqsad al-Sharia. I finished the principle of Takaful and conventional, and as I came from the Kuwaiti market, let me give you a brief about some facts of the Kuwaiti market. The insurance has started in Kuwait since more than 50 years, when Kuwait Insurance Company, the first national and conventional insurance company in the Kuwaiti market and GCC, was established on 10th of August 1960. Today we have more than 35 conventional and Takaful insurance companies in Kuwait. On 2001 we have welcomed the first Takaful insurance company as the first national and Takaful insurance company in Kuwait. On 1972, the Kuwait Reinsurance Company was established to provide the reinsurance services in Kuwait and overseas. On 26th of June 2006, the Kuwait Insurance Federation was established to achieve the following: organizing courses, held conferences, publishing magazines, and form committees. However, the KIF is not considered as a regulatory, as we don't have regulatory until now in Kuwait, and doesn't have any control on the members, on the insurance companies. Here are some of the statistics of the Kuwaiti market for 2017. This is the direct premiums against the paid and outstanding compensations in 2017. Premiums as per companies' nationalities, the Arabic, national and foreign. Outstanding claims as per line of business. As we can see, the medical has like 29% of the claims. paid claims. This is the direct premiums, outstanding and paid claims for the foreign companies. This is the premiums paid and outstanding claims for the Arab companies. Motor TPL, again, it's comprehensive. As you can see, the TPL is a disaster, 84%. Premiums and paid outstanding claims, national companies. Direct premiums from 2013 until 2017. And here is the direct premiums. This is my sources, and thank you very much.
Thank you, Mohamed. That was very informative. I think we're running a bit late in time, Mr. Alaa, so we might delay questions after the second topic, especially it is about the Takaful from reinsurance perspective. The mic is yours, Mr. Alaa.
Okay, no, it's okay. You will lead the session. It's okay, بالعكس كده.
Okay. Good afternoon, ladies and gentlemen. We're going to present to you Mr. Mohamed Akoob. I think he's very well known in the whole, everybody knows him. Mr. Akoob is currently the managing director of Hannover Takaful. He started his career in 1976 at Munich Reinsurance Company of Africa in different capabilities, including 6 years as general manager. He is one of the major contributors to the Takaful industry and was responsible for establishing the first Takaful company in South Africa. He joined Hannover Group in the year 2002 and served as the executive director and chief financial officer of Hannover subsidiary in South Africa. He was one of the pioneers in introducing the Takaful in the region, as he played an instrumental role in establishing Hannover Takaful in Bahrain in 2006. Mr. Akoob is the early success of Hannover Takaful, led by him to establish in 2008 conventional reinsurance branch in Bahrain under his leadership. His and the company's contribution and innovation to Takaful and Islamic finance have been well recognized by enormous industry, societies, and events. The company has been awarded many awards under his leadership, among which are Best Takaful Operator from Islamic Finance Award in 2012 and 2013 by CBI Financial Dubai, the Best Takaful Operator Award at the International Takaful Summit for every consecutive year since 2011 until 2018, and Takaful Insurance of the Year in 2015, 2016, and 2017 from the MENA, Dubai. He was named one of the top most influential figures for 3 years among the top 100 in the Middle East insurance industry. Without further ado, I'd like to introduce Mr. Mohamed Akoob.
Good afternoon, ladies and gentlemen. Thank you, Alaa, for that opening. I think it says more than I am, but thank you very much. Distinguished guests, ladies and gentlemen, very good afternoon. I know I'm in between lunch, so I'll try to be brief and quick. But firstly, I'd like to thank the organizing committee, the Insurance Federation of Jordan, and my dear friend Majid Suwamarat, the chairman of the Insurance Federation, for giving me the opportunity to be with you and to talk to you a little bit. Today I will just talk about Takaful from a Takaful operator's perspective. I think a lot have already been said about what Takaful is and the differences, etc. So I will go into more operational issues and see how we go. Who is Hannover Takaful? Alaa has already elucidated a little bit about it. We established ourselves in 2006 in Bahrain as the fully fledged Takaful company, one of the very few that has that credentials. Ownership is 100% owned by Hannover Group. We are separately capitalized and have an A rating from S&P. Today, we are regarded as the leading Takaful operator worldwide with clients, over 100 clients. And despite what has been said about the industry, we have been able to average double-digit returns on equities for the past 6 years. And indeed, we've also provided surpluses on our life portfolio. As a group, I wouldn't dwell into this graph. Safe to say that we are owned 100% by the Hannover Group in Germany, and we are only one of 10 subsidiaries on a worldwide basis. We are number 4 in terms of, from a group perspective, with a gross written premium of 21.3 billion, and we in Bahrain contributes towards that success of the organization as well. Let's go into the facts now. The major Takaful markets, I've put them down on that slide. You could see it on there. Basically, Saudi Arabia has total assets of about 15 billion with 35 companies. These are just the larger ones. Iran has 12 billion Takaful assets, 26 companies. Malaysia, 9 billion of assets, 20 billion. 20 companies, I beg your pardon. Indonesia has 3 billion, but 53 companies. Almost all those companies are Takaful. UAE have 2 billion under management and 15 companies. So you can see that those companies are sizable. That's about 149 companies. In 2017, the total contribution was about $46 billion. Overall, we did a count, and there are about 324 Takaful companies on a worldwide basis. So we might think it's small, but it's not. It's growing. And so I think that's a number that we need to think about as we develop this business. What are the assets worldwide? Its compounded growth rate of 6% per annum. 2017, it was like 46 billion. And we at Hannover estimate that that figure in 2023 will be above the 72 billion in terms of total assets for the Takaful market. We differentiated this from the banking because banking is far larger than the Takaful operations, and we felt that we should actually home in on what exactly the Takaful market is, and it's still sizable. The most developed Islamic countries in terms of Takaful remains Malaysia as number 1, Bahrain number 2 in terms of development, UAE 3, Pakistan 4, Saudi Arabia 5, and Jordan right in the middle at 6. So you can see that there is certain developments in Jordan. We have 2 companies who have been established for many years and highly successful as well. So I think we need to understand that the development is there. We just need to input a little bit more of our dynamism to ensure that the Takaful operators are successful. There's, of course, other companies that are also being developed, or countries as well. You can see all the slide in green. These are the areas of development, countries where we see Islamic development or Takaful development. Asia, in particular, Kazakhstan, Uzbekistan, these countries are developing. Kazakhstan is developing its own Islamic financial center, and they are looking to be the center for Islamic finance in Eastern Europe. So certainly these developments are happening. In South Africa, we've just launched the first micro Takaful for family business using zakat as the base. Then here in Jordan, we have the micro fund for women, which has also have been going on for many years, and it's been quite a successful one. I just put that slide to show that there is certainly development outside of the, let's say, GCC and Malaysian portfolios. So has Takaful and Takaful realized its true potential? Despite what I've said, the short answer is no. So now let's find out what are the challenges facing Takaful and Takaful companies. I think a lot of those you'll understand anyway. Excess capacity, the market remains soft despite the withdrawal of number of companies. This applies equally to conventional companies as well, but we've seen that on the Takaful and Takaful side as well. Price reductions and widening of covers due to excess supply and the overall slowdown in economic activities in the MENA region. Having said that, as a Takaful or reinsurance, we saw out of the UAE market in particular, $800 million of capacity vanishing at the end of December last year, which certainly indicates that pricing is under severe pressure. We do have socio-political challenges in our region, and certainly once these are resolved in one way or another, we can certainly see developments coming to the fore. High regulation. In Takaful and Takaful, it's particularly poignant. Increased cost of capital requirements, and these are issues that, of course, constrain the industries. The severity of natural perils. We just seen losses in Oman, in Kuwait, in Saudi Arabia in terms of flash floods and storms. So although we are a non-cat region in terms of typical earthquakes, etc., the flood and storm is quite a severe issue, and that needs to be addressed as well. Cyclonic activities in Oman, we've seen that over the last years, and of course, low penetration. I think this is an item that needs a lot more attention. We have in the region, in total, penetration of maximum at 2, starting at 0.2 to 2. And therefore, these are areas of challenges that still face the industry, the Takaful industry, the Takaful, and perhaps as well to a large extent, conventional industries. On Takaful, what are the specific challenges that we see? The first one is seepage or leakage of Takaful contributions to the conventional market. Either the Darura principle or for whatever reasons, we still see that, and I'm not lamenting it. I think we just have to be observant of that and see whether the intentions that we have are actually coming to completion. Different regulations and different models used in different markets. My colleague, Mr. Mohamed, has put some on his slides in the previous one. This really does cause a Takaful company particularly some pains, because the different models in the different regulatory environments, Malaysia, Saudi Arabia, the UAE, Bahrain, South Africa, all of them have regulations. Some are common, some are different, and these have to be contended within one Takaful pool or Takaful pool, and that's quite a complication. The lack of innovation. I think this subject has been discussed not only over this forum, but lack of innovation across the whole industry is something that needs to be looked at. I think the regulators are looking at it, and perhaps the challenge for all of us, including myself, is that we need to have a lot more about innovation and increase the size of the cake rather than cannibalize what we have. So we need to innovate, look at the products, what are the clients requiring, and what are we providing. The Takaful market size is smaller than the conventional market, but despite that, it's growing and it's outpacing the conventional market, so we need to work around that. The question, what is the Takaful market share in Jordan, for example? Well, it's around 10%, and there's 2 companies. Therefore, it does show that there is potential. The 2 companies in Jordan have been successful over a number of years. Over the years, if you look at the regulatory reports, have been profitable. Therefore, there is a space for it. It just needs customer orientation, serviceability, and listening to the clients. What is the solution forward? Well, there could be a lot of issues that we need to talk about here. However, I've listed a few. We have to look at the Takaful models, re-look at them, reorientate them. and perhaps challenge our Sharia boards again to look at that, the Mudaraba model, the Wakala model, the combination. What should we be doing, you know? And I don't think we've got the answers yet. We have some answers, but I think these, you know, when we talk of innovation, then there should be innovation on the models too. I think it's holding down the industry, and whenever I'm asked, I say, I think we need to look at these models again, and yes, there is no perfect solution, but we should go towards more efficiency. Then the second part on Takaful and Takaful is harmonization of the various regulatory regimes in the various countries. They're all different. Malaysia, Saudi Arabia, Pakistan, Bahrain. And if you have to contend with all these regulations, you could understand the cost of compliance. So therefore, there's a need, not necessarily to be exact, but there should be a synergy in which we can work so that the models can work for themselves, and there's efficiency in the products as well. Number three, new products and innovation. I think this is something we need to think about. We need to understand what are we doing, what does Takaful mean, and how we should service our clients. The use of technology, I think this is going to be a discussion here at this forum as well. This is the game changer. Innovation has to be done, and I think our spend on innovation is not enough. Then we look at our friend Mr. Osama has just mentioned about the size of the population. It's 1 in 4 of the Islamic faith, which is 25%. I took another tack at it. The halal food industry is worth $1.4 trillion, which is 18% of the world food and beverage industry. New products are required to finance these issues, from risk transfer through to risk sharing. Therefore, you could see the wealth. I think some of you mentioned the size of the wealth we have. Concentration of wealth, yes. And perhaps we are not mining that very strongly and utilizing what we have already. I mean, $1.4 trillion being spent on this industry alone. If we just look at the risks that come thereof, the financing thereof, the banking part of it, I think it's huge. And this is what I'm talking about, innovation as well, is that we need to look within ourselves to innovate what we have already. Then we see the developments of Takaful in London. In 2018, new regulations have been issued in the London market for Islamic commercial insurance. Therefore, you can see that the market is opening, and we are part and parcel of that market, but we are pioneers, and therefore we should take advantage of that. Osama mentioned the demographic power we have. We should make use of that. And importantly, over all these, what is further solutions? We need to engage with our rating agencies. We need to get the right rating for Takaful and Takaful to thrive. We cannot all the time be told that the market is too small. I mean, the market is small. We need to develop it, yes, but we need to challenge the rating agencies as well and say, what is it that you require? We cannot stay small. And we have to show them the big picture that we are going there. And they are listening. And I'm sure they are here too. Okay, I just basically touched a few issues, and I didn't want to go to too much detail. Thank you also to try to maintain your time. But we can now go to question and answers and see how we can go. Thank you.
Well, thank you very much, Mr. Akoob. I'd like to take the advantage of sitting on the stage to be the first one to ask. So, from your point of view, you said there are a lot of challenges, but also being myself as a conventional guy, just want to ask you, do you really consider Takaful as a product or a concept, or how do you define Takaful?
I think, to be honest, we shouldn't take it as a concept nor a product, but we should regard Takaful as complementary to conventional. In other words, it should have its own stream within the wider insurance industry. Once we do that, then we're part of the same flow rather than a differentiated flow. And if you can do that, I can certainly see complementary relationships between conventional and Takaful rather than being two separate streams. Why am I saying that? Is that if you see the evolution of companies such as in Pakistan, which is a typical example, where they first separated the companies, but now all conventional companies are allowed to have Takaful windows as well. What I'm saying is that the evolution is that they are not different, they are just separately or systematically done so that it serves a wider community. So I'd like to see these both as complementary streams, and if we have them as complementary streams rather than different, we would certainly see the development, because what it is, it's serving a special niche indeed, but at the same time, it is part of the mainstream. I'm not sure if I answered that.
Perfect, thank you.
We can open the chance for any questions to either Mr. Mohamed Moussa or Mohamed Akoob. If anyone has any question, please. So we can call the mic. Well, sorry, I mean.
Mohamed, thank you very much for your presentation. Mr. Akoob, I'm always...
Sorry, can we have your name?
Adel Fatouri, وساق Takaful Egypt. Mr. Akoob, I'm always interested listening to you for your presentation. You have touched very important points, actually. And the challenging that are facing the Takaful and Re-Takaful is not that easy. It's, in my opinion, I think it is. It will affect the future for the Takaful industry, whether it is gonna be promoted and developed, or I'm afraid to say, shrinking down. We can add to the challenges that you have mentioned, a lot of debates regarding the issues of the Qard Hasan and the surplus distribution. And as you mentioned regarding the different models, different all over the world of the Takaful industry, we really are in a very difficult situation. So you have mentioned that what is in your presentation you mentioned what is the solution and how we gonna make it better for the future. But do you really believe that the Takaful industry can survive? This is the question. Thank you very much.
Thank you, Mr. Adil. I think, yes, you asked a very poignant question. Firstly, I have to say, if I didn't believe that it's going to survive, I wouldn't be in the industry. Okay, so I hope that's the first thing. Look, for a Re-Takaful, I'm doing it from a different perspective. For a Re-Takaful industry, or for Re-Takaful industries to survive, you have to ensure that there's a vibrant Takaful industry. It's symbiotic. Now, having said that, I think the important thing is sometimes we think big when we are unable to take small steps. And this is the issue with Takaful as well. We try to write mega risks when our capital is so small. I think the issue is that we need to plan a little better and look at niches within the capital that you have, and find issues where you can outsmart the competition, innovation, and look at the business that you can write. We are not in a position to write mega risks with a small capital. And this is one of the flaws that has happened. Rather than look at a portfolio which is akin to the capital as you're growing and compete at that level, but compete well. And once you start doing that, we have seen pockets of excellence in the UAE, of companies, Takaful companies, medium-sized ones having the best results. Jordan is an example as well. In Bahrain, in Egypt, they're competing with big companies, yet they are managing better return on equities. The question is, how is it done? They focus on, in other words, stick to their knitting. They know what they're doing, and they do it better than if you are comparing now with the conventional ones. So I firmly believe that that can be done. The issue is, the proof is in the pudding. We established this Takaful in 2006. And now we're talking 2019. We have consistently produced Takaful profits. It can only be done if the Takaful companies have done the profits, because we are part and parcel of that organization. So I firmly believe there is, however, we should not compete on an open market basis, but rather plan, proceed, and process things within your capabilities, but do them very well. As far as the issues are concerned, that the problems or difficulties, yes, they are there. However, for example, Qard Hasan is an issue, yes. However, I always argue conversely. I said, let's not look at the Qard Hasan. The Qard Hasan only applies when you're making losses. So let's focus on making profits. And if we're making profits, there's no need for Qard Hasan. Agreed? So I'm saying these are the things that we need to work at. But yes, once you have the problem, we need to find solutions.
You want to add something? You want to add something? Yeah, please.
I'm happy that you mentioned that you are still believing that there is something we can do for the Takaful. But I'm afraid to say that, Mr. Akoob, unless we have a unified Takaful model, which solving all the problems of the Qard Hasan and the surplus distribution, and the meeting at the same time the international financial standards of the solvency margin and the solvency for the Takaful fund. We have solvency for the Takaful fund that we should meet, and at the same time we should meet the solvency for the shareholders fund. Unless we have a unified Takaful model and convince the Sharia scholar that we can do Takaful without having that Qard Hasan, and we can do Takaful without distributing surplus, unless we will be able to solve these two issues. I'm afraid to say that with the competition with the conventional, with the competition worldwide, with the reduction in the reinsurance, Takaful capacity, I'm afraid to say that I am not believing that there will be a survive for the Takaful industry. For this, I can add that the number of insurance companies for Takaful companies are reducing, not as before. The volume, the gross premium, the gross in Takaful contribution are slowing down, not like before. So we have to think, unless we have a unified Takaful model, a unit Takaful model, and get rid of the Qard Hasan and working as a risk carrier like the conventional, there will not be any future for the Takaful industry. This is my humble opinion. Thank you very much.
Thank you, Mr. Adil. I'm not in disagreement with what you're saying. All I'm saying is that the challenge for us, and that's what I said in my talk, is the challenge for us as an industry is that we need to engage with the regulators, with the Sharia boards, to find the model. And we as operators who understand the dynamics should be in the forefront of having change. Thank you.
Thank you. Any other questions?
Please. لو ما فيش حد عايز يسأل سؤال.
Yeah, طبعا. Please.
Okay, I just wanted to ask Mohamed Moussa. You presented actually the Kuwaiti market, and based on the discussion between Adel and Mr. Akoob, you think that this one of the reasons that the performance or non-performance of some of the Takaful companies in Kuwait is coming from the same concept that Mr. Akoob and Abdel were discussing, or you can add to this?
I think the main reason that most of the companies are not following the real standards, the true standards of the Takaful operation. They're just operating an insurance company without following the real Takaful standards. This is the main problem. Very simple, very simple. Thank you.
Not following the real Takaful
The
standards?
true standards.
Aren't they governed by the Sharia
They
board?
they have Sharia board, but the true standards are not really fulfilled by the management.
Well, I think it's worth mentioning that the Takaful concept and model is relatively a new concept, and it should be given enough time to develop. Well, the conventional insurance has been in the for more than 100 years, and it developed over the years. The first Takaful insurance company was formed in 1979. That is 40 years back. And I think the Takaful concept and Takaful model has been developing yearly. And actually, we cannot count the first 20 years because the need actually came at the late, the other 20. We have seen the growing need for Takaful for the last 10, 15 years maybe. So I disagree that I'm very optimistic that Takaful will survive because they will cover and they will comply with a need that has not been served by the conventional market. So I think with time, like any other science, any other concept, it will improve and it will reach to a better level of maturity, I guess.
I think
hopefully.
One more question is, at the end of the day, whether we talk about Takaful or conventional, the major issue is competition and pricing. If we get that right, it doesn't matter what model we're going to use, we will be successful.
Yeah. Well, Annie? خلاص, we're done.
Thank you.
Well, thank you. Thank you for our respectful speakers. Thank you, Mr. Alaa, for your questions. Thank you, everybody.
And we also would like to thank the head of sessions and speakers for their great effort and impressive presentation. Please, Dr. Lana Badr, a board member of Jordan Insurance Federation, and Dr. Walid Zarob, عضو اللجنة التنظيمية للمؤتمر وعضو مجلس إدارة الاتحاد. تتفضلوا لهون. Okay. Dr. Lana will be honoring the head of session, Mr. Alaa Abdel Jawad and Mr. Alaa Elzouhery. لا لا لا. For Dr. Alaa Abdel Jawad, yes. And Dr. Alaa Elzouhery. Last one. And I also kindly request Mr. Alaa Elzouhery to honor Mr. Mohamed Akoob. And Mr. Alaa Abdel Jawad to honor Mr. Mohamed Mahmoud for his remarkable presentations. Okay, also Dr. Walid will be honoring the Mr. Tariq Al-Bitar from Zain Telecommunication for being our telecommunication sponsor and lunch host for today, Mr. Tariq Al-Bitar. شكرا كثير لكم. اذا ممكن هيك صوره جماعيه. Yes.
معلش we have to mention
Yes.
lunches.
I did.
Okay.
Yes, I did. حكيت إنه الغداء أكيد hosted by زين و yes our main sponsor واليوم يعني الغداء رح يكون برا هلا فورا يعني بعد ما ناخذ الصورة التذكارية رح يكون الغداء إن شاء الله برا. I think يعني سهل إنه توصلوا لأنه في أفطات. بدي ارجع اذكر كمان انه اليوم رح يكون يعني اللقاء على الساعه 8 رح يكون بالانتركونتيننتال، رح يكون بهاي القاعة، مش رح يكون برا الأوتيل. فيعني إن شاء الله بنشوفكم على العشاء. بدي أرجع أذكر برضو إنه بكرة رح يكون في استعراض جوي يعني ما لازم استعراض جوي للطيران الجوي الأردني، رح يكون استعراض ولا أروع. يعني بتمنى إنه ما حدا يضيع عليه هذا الاستعراض. رح يكون على الساعة 3:30 إن شاء الله بكرة تقدر تشوفوه من شاطئ الأوتيل. شكرا لكم جميعا. نلاقيكم اليوم بسهرة جميلة رح تكون على الساعة 8، وإن شاء الله كمان بكرة بنشوفكم بنفس الوقت صباحا في second session for tomorrow. Thank you.